Hi, this is Zach here with the bulletin board heroes here at Box Markets for Tuesday, the 13th of December. Starting off with the FTSE 100, where we've got this market hopefully bouncing off the floor of this rising trend channel from back in October. Floor there around 74.30, so an end of day close back below that risks a move down towards 73.30 and the 73.20 and the 200-day moving average, the grey line there. Above 73.30, we're hoping for a move towards 7700 plus at the top of that channel by the end of next month. Clearly an end of day close through 7500 and obviously the big one at 7600 would be helpful to the cause. RSI in the upper 50s, which is in just the right place for these sorts of things, so for a continuation move. So let's see if 74.30 holds on the FTSE. Moving on to the DAX, which has a similar picture, largely because I've drawn a very similar rising trend channel there. Here we've had, 4 days of this market hugging the floor of that channel around the 14,000, I suppose, 200 area. The base there, that was also support back in the middle of November. So above 14,200, looking for this market to break the recent resistance around 14,600 and head up to 15,500 by the end of next month, obviously. Both breakouts, potential breakouts, both in the FTSE and the DAX, flying in the face of perhaps the fundamental picture. Below the 14,200 area risks the DAX heading back towards 13,500 to 700, which is basically the area of the 50 and 200-day moving averages. But after those multi-tested support line points over the last few days, one would have thought this market is pointing up rather than pointing down. RSI around the low 60s, so that's in a good place in terms of potential continuation. On to the Dow, which has also managed to bounce off the floor of a rising trend channel. That almost spot on there, so 33,400, 2-day test. In fact, we had another test of that earlier in the month on the 6th, so that looks pretty solid around that level, touch wood. And looking for the break of recent or turn of the month resistance at 34,600 to take us up to 36,000 by the end of next month. If we do break back below the 33,400 area, then there is the chance of a move back down to the 200-day moving average, 32,400. But that support there in the mid 33,000s area, which is below that, looking pretty strong at the moment. Moving on to Bitcoin, which where the word strong doesn't really come into play over the recent past, and more machinations with the FTX debacle too. Here we've got resistance around 17,500. Above that, looking really for a bull trap through the 50-day moving average, so maybe 18,000, 19,000, something like that over the near term, even if we then fail and head back lower. We got that line there as well from back in August, just under 20,000, but that seems a long way away at the moment. RSI still below the neutral 50 level, which is a negative, and that does suggest that even if we get a little spike towards the 50-day line, we will then fail, as we have done all through most of the year with these bull traps through the 50-day line from August onwards. Break of 15,500, a recent support back in November, would then risk a move down to the 14,000 area, which is a June support line projection. So that is basically what we're looking at for Bitcoin at the moment, going with that trend. And just as I said, the main thing here is that we get the RSI back above 50 to give the bulls some proper steer on potentially heading higher. Onto the stocks of the day, and first up is Arkle, which has had a second time lucky, hopefully, in terms of breaking the August resistance line and the 50-day moving average. Nice sideways shuffle there above the 50-day line, which is normally a decent signal. Initially looking for 0.7. Best case scenario, maybe by the end of next month, up to 0.8 or 0.9, which is the top of that broadening triangle from back in June. Upside valid while we hold above 0.5, so reasonable risk reward there above 0.5, looking for 0.9 on Arkle. On to Blackbird, which has had some decent news today, gapped off its lows, unfilled gap to the upside, also bear trapped back above the November support at 12.75 pence, above 12.75, looking for the 200-day line at 17 pence, maybe as soon as the end of this month, and ideally with there's no price action back below the top of today's gap at 12.25. We're backed by bullish divergence as well, which is the reason for the inclusion of the stock today over and above today's news. On to Bradda, which seems to be looking pretty healthy at the moment. We've had an unfilled gap to the upside yesterday, broken the high of that day, which is a decent signal. So that high around 8.6 pence, and the longer we stay above 8.6, the greater the chance of a move towards at least 10 pence in the 200-day moving average, and maybe 12 pence by the end of next month. But that unfilled gap to the upside, one of our favorite setups, and let's see if it works. Upside valid while we're above 8 especially, which is the 50-day line and the broken September resistance line. On to Caracal, where we're hoping that one day soon we'll be able to not only touch 0.9, which is the top of the range, but actually close above it, which would be quite a coup, quite near to that now. We have already had a decent setup, so it's a bear trap gap reversal, so bear trap new lows there below 0.6, and then the unfilled gap to the upside, multiple points above the top of that gap and above the rising 50-day moving average, which we haven't touched since we broke through it. That suggests that at above 0.9 on an end of day close basis, we could finally be looking for or looking at some decent upside. The favored area at this point would be back up to that line of resistance I'm drawing there, so 1.15 pence, maybe as soon as the end of this month or going into early January. So looking rather better there for Caracal after that bullish divergence signal and the gap that we had at the end of last month. Moving on to Empire Metals, where progress seems to be being made. We've got a rising trend channel there from the end of October. Floor of the channel there around 1.5 pence, top of the channel heading towards 2.4 pence. And that could be a target which is valid for as soon as the end of next month. The other point to note, which I didn't note before, is the way that the 50-day and 200-day moving averages both crossed. We had a golden cross there last week, and that should be a decent momentum signal for the shares. The other point to note there was that bear trap gap reversal again, with also something I hadn't drawn in before, which is a bullish divergence line. So we had lower lows for October before that gap higher. So looking pretty good on Empire Metals with all the key bulletin board hero favorite signals or triggers there for this particular stock. On to Imperial, East Imperial rather. Here we had that trend line break. Basically, that was I think just at the beginning of the month, last week perhaps, and the unfilled gap to the upside. We've held the top of that gap at 2.8 pence, and above that, looking for at least the 200-day moving average at 3.8 pence, and up to 5.5 pence, perhaps as soon as the end of next month. So looking pretty sharp there on East Imperial at the moment, with that tiny unfilled gap to the upside, a decent trigger, and that should give the shares some good momentum over coming weeks. This stage only well below 2.5 pence, really delaying the upside scenario. Onto stock, which I don't think I've looked at before, but the setup here too good to resist, in the sense that with global ports we've had an unfilled gap to the upside back at the end of October, and then another one yesterday through the 200-day moving average. Too good to resist that one, so that suggests that we could be heading towards the top of that rising trend channel from July, as high as £1.65 over the next 1 to 2 months, maybe even as soon as the end of January. So let's see if that setup and the recent sweep higher will actually deliver for the bulls. Stop loss at the moment back below the initial December resistance at 105 should cover it. So above 105, looking for 165 on global ports. A stock which doesn't have much charting information at all, but there's just a start of a glimmer of something brewing in the charting window here. Here we've got a triangle formation, which is basically has a resistance line there around 0.22. So an end of day close above 0.22 could be the first sign that we retest the best level since the IPO above or towards 0.3 over the next couple of weeks. So let's see if Hellenic Dynamics will come up the goods. Obviously, we don't want to see any price action now back below 0.16 pence ahead of a potential 0.22 pence break. Next up is a stock which was initially requested. I missed the boat, or sort of partially missed the boat. I think it was in the low 30s. Unfilled gap to the upside for Invinity, We've hit our first target today at basically at 50 pence. Above 50 pence, looking for a new target, which could be up towards 66 or 67 pence at that July resistance line projection. And ideally today we have an end of day close above the 200-day moving average at 51, so above 51, looking for up to 66 pence. The whole rally here started with that bullish divergence line and helped along with that unfilled gap to the upside, so pretty impressive stuff there at the moment. Speaking of unfilled gaps to the upside, we've had one here for Oriole. Here it's a bear trap gap reversal, so bear trap below the November support there at 0.11. Above the top of the gap, certainly at 0.12, looking for a retest of the 0.2 pence area over the next 2 to 4 weeks. The whole turnaround here backed by an uptrend line in the RSI window, bullish divergence line, and really only back below 0.11 would seriously question the idea of a lasting recovery here. Best case scenario over the next 1 to 2 months as high as 0.25 at the top of that July broadening triangle. Just a few situations to go now. First is Synergia, which I believe used to be called Oilex. Here we've got the first signs of a turnaround, i.e. we've got bullish divergence, so much lower lows for December, but the RSI actually higher than it was back in September. Looking for an end of day close above 0.09 really to give us 0.13 if this is indeed the turnaround point. Otherwise we maybe have to settle for a resumption of the overall pullback that we've had since July, but looking rather better there at Synergia than it has for quite some time. On to Trafalgar, which did what many stocks that spike up higher in this market do, and came all the way back down again. But we have had a higher low versus the low last month, so that was 0.16. Today it was 0.16.5, let's say. End of day close back above the 50-day moving average could be enough to give us another chance at heading up to those peaks from last week at 0.3 plus, but certainly worth waiting for an end of day close above the 50-day line. That's currently at 0.19. Moving along to just the last two. First is Topps Tiles, which was also a requested stock, which I was a bit slow on. Here we've had two unfilled gaps to the upside, but then we had a gap down, so an island reversal, but an end of day close above the top of the latest gap at 49 pence could be the trigger for fresh upside and a move towards the top of a rising trend channel, which has been in place since back in March. That's at 65 pence. So basically at the moment we're looking for above the 200-day line at 46 to reach up to 65 pence, which I suppose looks a bit ambitious at the moment, but that gapping activity may be a sign that the shares can step up to the plate. Finishing off with Zytronic, which has gapped up today after breaking a line of resistance from earlier in the year, back in May. That line there and the 50-day moving average around £1.32. End of day close above the 200-day moving average at 143 could be enough to take the shares up to the top of that rising trend channel from July up at £1.60 plus, hopefully by the end of this month, and powered by that rising 50-day moving average. That's it for me today. More updates tomorrow.